Hello, and welcome from whichever side of the world you're watching and hearing me from. My name is Ian Joseph, market analyst at HFM Markets. Now, today is going to be an interesting day looking at the financial markets, but a quick disclaimer is the information herein is meant for educational purposes. None of these information should be construed as investment advice. My purpose here is to enable you find high probability setups the right way in the financial markets. Starting us off with the day, I would want us to look at the economic calendar, see what we have in store. But before I go there, I want us to go to our HFM website portal, and we have just launched a new product. If you come to this icon over here and go to advanced insights, this is the most recent addition to our website, whereby this is empowered decision making with big data, AI, sentiment and volatility analysis, which is going to empower your decision making with sentiment and volatility analysis from our exclusive new insight engine that applies big data, AI to millions of news articles, to live trading positions and a timeline of the upcoming events. This new advanced insight page provides a whole new trading experience. Now, this is totally free to HFM clients, whereby you're going to have big data AI processes, millions of news articles. It's going to show you real-time volatility analysis. It's also going to track data for all tradable assets. It's going to be available for both MetaTrader 4 and MetaTrader 5. It's going to be concise and powerful visualizations, whereby you are going to receive advanced market insights, providing you with live trading positions with detailed events in timeline. Now, terms and conditions do apply, and for you to access the advanced insights, you need to have at least $100 deposited into your live account. Going back into this icon, I want us to start with the economic calendar. Remember, all of this information, everything you need to know about trading can be found on the HFM website. I want us to look to the economic calendar. This is whereby everything that you need to be, if you're waking up in the morning, this should be your first place to go to create ideas, generate ideas that is going to help you look for opportunities in the financial marketplace. Now, for today, we do have GDP that has just come out for the British pound, and I want us to look into a few details what the data has in store for us and how this information can be used to find opportunities in the marketplace. I want us to open with the document that has just been released. Now, this is the official document that has been released by the United Kingdom Bureau of Statistics and the GDP monthly estimate for June 2025. Now, the main points are GDP is estimated to have grown by 0.4% in June of 2025, following an unrevised fall of 0.1% in May 2025 and a fall of 0.1% in April 2025, revised from a 0.3 fall in our previous publication. Now, real GDP is estimated to have grown, meaning the economy in the United Kingdom has grown by 0.3% in 3 months to June 2025, compared with the 3 months to March 2025, largely due to the economic recovery in the United Kingdom. Okay, sorry about that, my platform just did freeze. But moving over with the data, it has been driven by growth in the services sector within the specified period. Monthly services output grew by 0.3% in June, following an unrevised growth in May 2025 and a fall in April 2025. Output grew by 0.7% in June, following a fall of 1.3% in May 2025. Construction output did grow in June, also following a fall of 0.5% in the previous month. Looking at where we are, the monthly GDP is estimated to have grown by 0.4%, and this is the key data that we want to look at. GDP in the United Kingdom has actually come out better than anticipated, meaning things are looking positive in the United Kingdom, and we have estimated to have grown by 0.3% in the 3 months to June 2025 compared to 3 months to March 2025. Looking at the graph of where we are currently at the moment, this is what you're looking at. If you're looking at the index against the timeline, you can see the GDP has been on a consistent uptrend currently at the moment, whereby we are at 102.9 on the monthly index. Now, the biggest gainers are the services sectors, the production and construction companies, whereby the services sector did grow by 0.3% once again after growing by 0.1% in May, meaning the data has come out positive compared to the last 3 months of data. Now, whenever you're looking at this information, yesterday we did have a class, and we usually do have classes that do run throughout the week. Kindly go to our website, register for the trading master classes. Yesterday we were talking about bridging the gap between fundamental and technical analysis. How can you use this information for you as a trader to find opportunities in the marketplace? Remember, the markets are moved by fundamental news releases. If the GDP today has come out positive, and we shall switch over to the charts and look at how this information has affected price action and how you as a trader can look at opportunities. Going back to the calendar, the main highlight of the day is going to be PPI, which is going to come out in the next 4 hours 54 minutes. Remember, whenever you're looking at the economic calendar, there are usually 3 bars or 3 sets of colors that you want to look at. Now, whenever you have a yellow bar, this means that you're anticipating low volatility in the financial markets. Whenever you're looking at an orange bar, this means that you're anticipating medium to moderate volatility expected in the markets. But whenever you have a red bar, like what we are going to receive today at exactly 15:30 Nairobi time, you do anticipate high volatility in the financial markets. Now, this is going to be the previous data. As you can see, 2.6 is going to be the previous data. We are forecasting 2.9%. The actual number has not yet come out. Now, this information is going to be producer price index, excluding food and energy. Now, why is this data important to us as traders? This is because it is released by the Bureau of Labor Statistics. This is the board which is in charge of releasing the data to the public in relation to what is happening to the United States of America. And the measures are the average changes in prices in primary markets of the US by producers of commodities in all states of processing. Those volatile products such as food and energy are usually excluded in order to capture an accurate calculation. Generally speaking, a high reading is seen as positive or bullish for the dollar, whereas a low reading is seen as negative or bearish. Now, when you're looking at this data, if the information comes out better than 2.9%, it means that the dollar is going to be generally stronger or bullish. But if the data does come out lesser than 2.9, it means it's going to be seen as bearish. Now, you do have a brief description of the history of the dollar. As you can see, we coming back from highs of 9.2. This was back in 2022, where we are currently at the moment, and we would want to look. Remember, fundamental news releases usually have a structured way into how they are released. We did have CPI this Tuesday. Now, CPI was looking at the consumers. The data that will be released today is going to look at the producers. And this information, investors look at it to judge where the economy is generally headed to, because these subtle clues are going to show us what investors are more likely to do in the near future. If producers are going to have a data that is lesser than forecast, it means, okay, there's something wrong with the production sector in the United States of America, and this could have an effect on prices when you look at the charts. Now, at exactly 3:30, remember, this information is available to you at HF Markets. Everything that you need to look at is currently available to the website. All the tools and education you have been provided, and I will want you to go through the information, look at, okay, what can you use for you to find opportunities? Remember, the goal of a trader is to find high probability setups in the financial marketplace, dealing with quality over quantity. Looking at Australia, they did release their employment numbers today earlier on at exactly 4:30 a.m. And I would want to touch on what these data means, especially if you're looking at the Australian dollar. Now, once again, this information is from the Australian Bureau of Statistics, and the labor force of Australia estimates employment, unemployment, underemployment, and participation of hours worked from the monthly labor force survey. Looking at the key data, you can see unemployment rate has actually gone down, whereby we are seasonally adjusted to 4.2%. Now, unemployment is a leading key indicator of how the health in a particular economy is, because if more people are employed, it means spending is going to be higher. People are going to be paid, money is going to be circulation, people are going to buy food, people are going to pay for school fees, and whenever money is circulating in an economy, generally the currency tends to do well. Looking at where we have come from regions of COVID, this is the high that we did see at unemployment rate in the Australia region, seasonally adjusted, was at highs of 7.4%, but after COVID, the markets did regain. Currently, we are trading below the 4.2% unemployment rate, which is good considering the Reserve Bank of Australia did lower their interest rates this week, justifying that, okay, things are headed in the right direction. People are getting jobs. Whenever we are looking at this, and I would want to look into a specific information here to deal with employment in trend terms. In July 2025, employment increased by 24,600 people, which roughly equates to 0.2%. Now, the total amount of people in the workforce is almost 14,659,300 people who are going to be paying taxes, who are going to have money to spend in a particular economy, and this is usually seen as a good indicator of economic health. Now, when you look at full and part-time employment in trend terms in July of 2025, full-time employment increased by 23,000 to 10,125,200 people, and part-time employment increased by 1,300 people. Part-time share of employment was 30.9%. And looking at the employment to population ratio, the graph is looking very healthy, which justifies what the Reserve Bank of Australia has been doing for the past 3 consecutive sessions, whereby they have lowered their interest rates, meaning they're advocating for people. The economy is in a better position. Kindly go take out loans. Loans are going to be much cheaper for you, meaning that there's going to be more money at the end of the month in your pocket, which, if you are a trader, yes, we are not in Australia, but we can use this information to find the probabilities in the financial marketplace, make informed decisions whereby you can make probabilities, and they are calculated probabilities. Now, the employment to population ratio, seasonally adjusted, the graphs are quite healthy. The final thing I would want us to look at in terms of the Australian dollar is the hours worked, whereby we have seen an increase to almost 1988 million hours of people who have been working. Now, this is how an economy is generally built. Whenever you have this amount of hours of people working, it means that yes, the economy is headed in the right direction. And we shall right now switch over to the charts. Let me just pop up my charts. Just a moment. And look at how this information could be used for you to find opportunities in the marketplace. Just a moment as I find my screen. Jolly good. Now, switching gears to the screen, I would want us to start off with the Australian dollar against the United States dollar. How this information has been very critical for us traders. Now, we did see during the Asian Open, if I can change a few properties here. Looking at Asian Open, when the markets did open today, we did have a rally to the upper side whereby this most recent candlestick broke the most recent high that was formed yesterday during New York Open, and then the market did start retracing. Looking at the Australia dollar against the United States dollar, the data backs more long opportunities whereby we have been seeing prices making new higher highs, higher lows, and finally we are at this current point in price. Now, if I was to look at opportunities, remember this information is for educational purposes. A Fibonacci tool is a very good retracement tool for you to look at, okay, where could be the next price points prices would come to for a further continuation to the upper side, and you would want to focus on the golden retracement region, which is usually in between the 50% and the 61.8% region, whereby we do have this order block forming currently at this point, whereby we are seeing the markets retrace. Could this be an opportunity for a further push to the upper side? But remember, whenever you're looking at the financial markets, we as traders, we want to look at probable scenarios. Remember, there's only one of two things you can do in the financial markets. You can either buy, you can either sell. And whenever you're looking at these assets, never be fixated to one side of the markets. Always ask yourself, what can I do in case prices do the opposite thing? But if I'm looking at price action, I would want to focus on this region. If prices do break below the 61.8% region, we might move further back down to the 0.64890 region. But if we do get support forming around this region, then this could justify a further move to the upper side, whereby we have seen the data being stronger for the Australian dollar. And could this be an opportunity for you to find more long opportunities if at all we do get this zone respecting? As you can see, price action is currently headed towards the golden retracement region of the Fibonacci level. I would want us to switch gears into gold, which is the precious metal, which has been quite very very interesting over the past few trading sessions ever since this was Monday, Tuesday, Wednesday, Thursday. Ever since Monday, we had this rally to the downside, and then Tuesday, we entered a period of consolidation. On Thursday, we did break above the period of consolidation that had been forming on the previous day, but the markets are currently retracing at this particular region. Looking at gold, we would want to see if there's going to be a clear breakout of what we are seeing at the moment. And if I can just highlight this region here, this is one of the regions I would want to see at the moment. If we do break to the upper side, there's a high possibility that we might go to the next region of interest, which is going to be above the 3,405 region on gold. But on the other hand, remember, as a trader, you have to look at both opportunities and then react to the best possible scenario. If we do break below the 3,330, which is a psychological level on gold, we might continue moving back down to lows possibly around 3,280 region. Very interesting. Remember, today is a Thursday, meaning the weekly candlestick has only today and tomorrow for it to print out. You need to be very careful whenever you are analyzing the market. Ask yourself, what period are you in? If it's a Thursday, it means that you have less than 48 hours of trading towards the market close. Now you ask yourself as a trader, would I want to scalp this market? Would I want to day trade this market? Would I want to swing positions in this market? Moving over to commodities, and I would want us to look at oil, and this is US oil, crude oil at the moment. And going back to the information on the HFM website. Remember, if you don't have an account, kindly do create one using the link on the website, which you're going to provide you with. It's going to give you opportunities. The AI analyzes these markets and it gives you opportunities that you're going to look at. Currently, at the moment, oil is trading at $62 a barrel, and we have been seeing prices of oil making lower lows, lower highs, lower lows, lower highs, which is good for a particular economy because high oil prices usually tend to signify that inflation is very high in a particular economy. If you look at it on a H4 time frame, we did make this most recent high, but price action of late for the past 58 bars prices has lost almost 11%, which is good for the consumer because low oil prices usually mean the economy, people it's going to have an effect on the inflationary, because most of the things are tied to oil. If oil prices are high, there's a high likelihood that everything is going to follow suit on it. Looking at oil prices, if I would want to look at speculations, looking at where we are currently at the moment, a Fibonacci tool is one of the best tools a trader can have at their disposal, because it's going to give you possible retracement regions that you will be looking at. Ask yourself, okay, what are the possibilities that if prices do come to a particular candlestick, we might see retracement? And the Fibonacci highlights a very interesting zone, and I would want us to look at it currently at the moment. If I can pick up my shape, I want to identify the region between the 50 and the 61.8, which is the golden retracement region. You can see the market did make recent or more or less equal highs. This was last week. Looking at the H4 time frame, this is last week's price action, whereby we did have a massive trend to the downside. Could this be a short-term retracement? If we do respect the regions between the 23.6, the 38, the 50, or the 61.8 region, there could be further opportunities for you to look at selling opportunities in oil markets. But at the same time, there is also that opportunity. Remember, as I've mentioned, as a trader, you have to look at both sides of the coin and make the most informed decision when it does seem fit. There is also a possibility. Remember, when you're looking at oil usually moves through fundamental news releases. You have to look at the geopolitical tensions, especially in the Middle East and Russia. If something does pop up currently at the moment, the geopolitical tensions have calmed down, and we have seen prices of oil coming back from highs that we did form around $77 a barrel, which was quite interesting when this happened. This was quite a few weeks back when we did have the escalations between Iran and the United States of America, whereby there was a bit of bombardment and the oil prices did quite rally to the upper side. But as the markets did digest the piece of information afterwards, we did see oil prices coming back down. Now, a quick note is that for oil, it has to trade around the $60 a barrel for it to be profitable to dig new wells. Okay, so if oil has been found in a particular region, it's profitable for oil wells to be dug only if the prices of oil are trading above $60 a barrel. And currently, at the moment, we are trading at $62 a barrel, which justifies for more oil. As did Trump say, drill, baby, drill. And this could be quite interesting to note in the next few trading sessions. I would want us to look at equities before we go on to currencies, starting off with the tech heavy NASDAQ, whereby we did see NASDAQ make an all time high this week around the 23,900 region, let's say almost 24,000 region, and we are currently retracing, whereby we did have this small candlestick, this red candlestick here, having a short-term retracement, and then the market entered a period of consolidation. Now, whenever you're looking at price action, it's advised to start from a higher time frame, moving to a lower time frame to understand the general direction of the market. As the saying goes, the trend is your friend. You can never stand in front of a moving train, you will get smashed. So it's advised you start from a higher time frame, going to a lower time frame to look at, okay, where does the higher time frame point us to? We are making higher highs, higher lows, higher highs, higher lows in the marketplace, whereby we did break the most recent high, and the market has entered into a period of consolidation. Now, someone could be asking themselves, why is the market consolidating? Usually, whenever this happens, is because whenever you are anticipating major news releases like what we are going to receive today with producer price index, the markets usually wait. And who are the markets? These are the investors, the traders. They are going to wait for the piece of information to come out so that they also make informed decision. This is why fundamental news releases should be the foundation of your trading. Always ensure that whenever you wake up in the morning, before you do execute a position, go to the HFM website, look at the economic calendar, ask yourself, do we have any high impact news releases today, so that you can make informed decisions, you can plan out yourself better, and there's a high possibility that you are going to make money if you follow the route. Now, looking at the consolidation that we have been seeing over the past few hours, for the past 15 hours, the prices of oil has been consolidating. No, the prices of the Nasdaq, sorry, has been consolidating around the 23,846 region, and we will want to see how price action is going to play out, especially when the news is going to be released today at 3:30. Remember, if the data does come out positive, it means it's going to be good for the dollar, meaning we might anticipate prices of the Nasdaq moving further to the upper side, possibly making all-time highs. But if the data does come out negative, there is that opportunity that we might break to the lower side, come back to regions of inefficiencies around 23,552. There's only one way to find out. Looking at the Dow Jones, now when you're looking at equities, Nasdaq, Dow Jones, and the S&P 500 are very highly correlated, meaning if one moves to the upper side, there's a very high likelihood the others are going to follow suit. Looking at the US 30, which is the top 30 companies in the United States of America, a similar price action is playing out, whereby we did have this massive push to the upper side, whereby in the past, looking at the H1 time frame, the Dow Jones has gained almost 2.28% of its total index in less than 33 hours of trading. Now we are entering a period of consolidation. Once again, why are the markets doing this? We are waiting for the data. The markets are waiting for the data so that we can see, okay, what could be the next possible scenario in the financial marketplace. I would want us to switch gears into technical analysis, looking at currencies, especially starting with the euro against the United States dollar. Once again, the markets are making higher highs, higher lows, higher highs. We just did have this most recent higher low being formed in the market, a region of support around the 1.15950, and we would want to see how the markets are going to react to the piece of information that we will receive later on today. As you can see, the markets have started retracing to the downside. Once again, a Fibonacci could be one of the best tools that you can have at your disposal, looking at regions of whereby the markets could retrace to, whereby we are currently trading around the 38.2 region, but we will want to look at the golden retracement region and this particular candlestick here. If you do go down to a lower time frame, you're going to get an order block, which is a very important candle. You can see price action did have a major region of resistance, whereby we did break to the upper side, but the markets did close aggressively afterwards around the 1.16977, and then the markets did finally break to the upper side. Now what you're currently seeing is a short-term retracement. Could this be an opportunity of prices coming back down to a region of discount for you to find more long opportunities in the marketplace? If the data does come out positive, it means that we might see the prices of euro continuing further to the downside. But on the other hand, if we do have data coming out negative for the dollar, it means the euro could be slightly stronger for the day, and we might see prices coming back up to 1.17290. I would want us to switch to the British pound against the United States dollar, and the markets are fractal. This is something I learned in the financial markets. The price action usually repeats itself over and over again. And we have seen in several assets whereby usually before major news releases, the market enters into a period of consolidation. You can see also on British pound against the United States dollar for the past 12 hours or so, looking at the 30 minutes. If I can switch over to the 1 hour time frame, looking at the piece of information for the past 24 hours, prices has been consolidating, and we will want to look at what could be the next probable scenario, highlighting our region of interest. Remember, if you are a trader, you're looking at fundamental analysis and you try to bridge the gap between fundamental and technical analysis, whereby you would want to make informed decision. Yes, if the data does come out positive for the United States dollar, it means we are anticipating more long opportunities on anything that has the dollar to it. But if at all the data does come out negative, it means you're looking at more selling opportunities, and you will want to look at, if we do break to the upper side, you might want to look at more long opportunities. We do have relatively equal highs at 1.35909 at this particular moment in price. Sorry about that. If prices do break to the upper side, we might see prices of GBP USD continuing with the trend. Remember, the trend is your friend. But if we do break to the lower side, we might come back down to regions of inefficiencies around 1.350. That's going to be it for me. I am going to take a few questions if at all you do have any. Yeah. How can a trader apply to work with you guys outside trading? I don't understand your question here. Can you be kindly be more precise about your question? Can I trade oil with HFM? Yes, you can. This is the chart we are looking at oil currently at the moment. This is US oil denoted as crude oil. This is the asset you can be looking at. Now, whenever you're looking at oil, you have the US oil and the Brent oil. You can trade oil. You can trade both commodities with HFM. Fib has no magic. We identify PDA in the discount for buy and premium for sales aligning with the Fib levels. Exactly. Now, when you're looking at the premium and discount, basically it's the Fibonacci without all of the other values except the 50%. So below is going to be a discount, above is going to be a premium. Now, it's very subjective whenever you're looking at the markets. Remember, everything does work. Here, everything does work in the financial marketplace. It just depends on how you're going to apply that piece of information. My account is having an issue. Kindly reach out to support at hfm.com for you. Okay. We shall reach out to you, Shali, about that. Don't worry about your account. It shall be sorted out. How can I get a HFM funded account? That's a very good question. First, you need to have a HFM account. If you do have a HFM account, we do have bonuses that we do give out. We do have challenges that if you do pass, there is a possibility that you might receive a funded account. Can I trade dollar index with HFM? Yes, you can. If I can just look at it at the moment, if you look at the market watch list, yes, you can trade the dollar index with HFM. There are no more questions on the Instagram. I want to appreciate all of you. Uh, quick a quick one is always ensure that you do have practice risk management. Always ensure that whenever you're trading the financial marketplace, practice out risk management. The goal is to stay in the industry for as long as possible so that the probabilities do play out in your favor. That's going to be it for me. Stay safe, take care of yourself. I'll see you in the next one. Sorry?